If you're into Web3 and its other applications, you must have noticed that nothing's been working for that space lately. In fact, as time passes, more and more investors are moving away from what once looked like the future of the world. But is it going to continue falling from grace? Or can we still have hope? In today's video, we'll talk about FTX's collapse after being investigated by federal authorities, starting off with Binance putting FTX in the ground. Things weren't looking too good for FTX, but then Binance just placed the final nail in the coffin, and that's when people had started getting anxious regarding the exchange's legitimacy, and in that skepticism, they simply started fleeing out of it. But here's where all the damage happened. After the firm realized the potential collapse, they just decided that they might as well sell it to prevent liquidity, and to help FTX manage the damage, its rival Binance came to the rescue. It turns out that the CEO of Binance announced that they'll be acquiring FTX via a non-binding deal for all of its non-US businesses. The amount at which it was being bought remained undisclosed, but it's worth mentioning that it was most probably way less than what FTX was being valued at a few months earlier, $32 billion. But what happened next is the real news. Just one day after the announcement, Binance decided to back out of the deal. Why? Well, their reason for doing so was the inability to manage the damage that had been done. But again, can you blame them for doing this? Coming up, why did Binance decide to back out? It all started off with reports claiming that both the Department of Justice and the Securities and Exchange Commission were examining the firm for any sort of criminal activity or offenses made in the name of security. Following that, they also had the Securities Commission of Bahamas freeze all assets belonging to FTX Digital Assets, which is a subsidiary of the crypto exchange. That's a huge blow for CEO Sam Bankman-Fried, who was earlier this year hailed as a savior because he had helped quite a few cryptocurrencies stay afloat after they were having financial troubles. Now he's just tweeting and apologizing in public for the mess that he has created. What's more is the trust between FTX and investors. There's no doubt in the fact that the relationship that Bankman-Fried built with investors is now very closely to being something of the past. In fact, the investigation into Bankman-Fried and FTX is actually most concerned with the possibility of the firm using customers' deposits to fund their bets and trades at the Bankman-Fried's hedge fund. If proven, this would be a very serious violation. Not to mention that this is quite the opposite of how Bankman-Fried was known a few months back. And that's the saddest part of this story. Next up, a little on how things will get more strict following the FTX crisis. The latest crypto crisis with the FTX mess, as a cherry on top, has called for stricter regulations. The thing has become so big that even the White House has to get involved. Press Secretary Karine Jean-Pierre reiterated that developments with FTX show us exactly why cryptocurrencies need to be regulated. She further explained how the White House, as well as relevant agencies, would now be monitoring the developments as closely as possible. If we were FTX, we'd be scared. Very scared. This doesn't go without saying that this course of action was long overdue, especially with the overall state of the crypto market deteriorating with every passing day. Of course, FTX has made things worse, but not all the blame is on them. Moving on, FTX also gets its European license suspended. The crypto exchange got its license suspended in Cyprus recently by the jurisdiction securities regulator, and this was the direct result of the liquidity crunch that the firm was facing. Because of that, the company had to have a withdrawal freeze. How about that? FTX only got its approval from the Cyprus Securities and Exchange Commission in March. The exchange claimed that the license would allow them to serve the whole European economic area. At the time, the firm looked as good as it could be, only that nobody, probably not even the CEO, knew what was about to unfold in the coming months. And with the license now gone, so is FTX's opportunity to do something in the European market. Lastly, we have the weirdest development from the FTX mess. It was revealed that Sam Bankman-Fried's $32 billion firm was run by him and a bunch of kids living in the Bahamas. Okay, what? No, for real. The company had around 10 people that were all living together. And what's even weirder is they are all aged around 30 years or younger. Many of these people were former co-workers from the trading firm called Jane Street. The rest who had not migrated from Jane Street were found by Bankman-Fried in the Massachusetts Institute of Technology. And if that's not enough to weird you out, here's more. It turns out that all 10 are, or at some point were dating each other as romantic partners. And this also includes Caroline Ellison, CEO of Alameda Research. research. In fact, she was involved with Bankman-Fried more than once, and her firm played a huge role in the collapse of FTX. Honestly, as details keep coming, this case is starting to feel weirder with each passing day. Moving on to what if what happened to FTX could spill over to the rest of the crypto market, starting with the big question: what challenges does FTX face moving forward? Given that the firm successfully gets out of this federal authority mess, it still won't be easy for it to make its way back to stability. For starters, it'll have to look for huge amounts of money, quite possibly billions of dollars, to meet customers' demands for withdrawing their funds. This would be much more difficult than normal, because now more than ever, users are hoping to flee from the firm and take their funds along. But this all goes deeper than just a simple problem of investment, or lack thereof. For example, only a day before the deal with Binance was made, Bankman-Fried was as calm as ever. He even tweeted saying that the company was doing just fine, and that they had now used users' assets to make trades. But this was soon proved to be a lie, because the firm had sent a message to investors from Sequoia Capital that clearly explained that the company was not only facing a liquidity crunch, but also solvency problems. So, do we assume that he just lies? Or was this a one-off thing, where he made an honest mistake? Clearly not, because in a series of tweets, he himself explained that he had messed up twice. Following that, could the FTX crisis spill over? If you think the FTX crisis won't take the whole market down, you're in for a surprise. Let's start with the most popular cryptocurrency, Bitcoin. Since the FTX drama started, Bitcoin's value has gone down from $20,000 to $16,500 for a coin that has already been doing so badly. This is just an insult to injury. In fact, the whole sector dropped by 5% within 24 hours. And if that's not enough, a popular token on the Solana protocol is completely dependent on FTX. This means if the exchange goes down, there's a very high chance that the token will too. In the process, millions of dollars will be wiped off the market. To say that it's a domino effect would be an understatement. But as far as stable coins such as Tether are concerned, it too has taken a very slight hit, but things are seemingly okay. We'll still have to watch out for how the market reacts to all this fuss in the coming days, because some things aren't black and white immediately. Finally, could the crisis spill into wider markets? You know, at its peak, the crypto market reached a combined value of $3 trillion. Ever since then, it has seen better days. And while some are hopeful that the situation would turn around soon, many have lost hope. And to be fair, who wouldn't? Falling from $3 trillion directly to just $80 million is a massive loss. Not to mention that the market has seen 12 months of hardship, with what is now termed as crypto winter. And while a lot of the elements proved to stand the winds of change, not many were spared from the effects of this winter. Unfortunately, with a new crisis hanging over the market's head, any hope that people had for a positive change should now be further lost. No doubt that the crypto winter will last a lot longer than initially expected. Although you can't just blame FTX for this, because there are several other factors involved as well. For example, the Ukraine and Russia war is one political issue that made its way to pretty much all parts of the world economy. But one thing's for sure, once you hit rock bottom, there's only one way to go: up. Who knows? Maybe both FTX and the crypto market will soon bounce back. That's a wrap for this video. Do you think Sam Bankman-Fried should be held accountable for what has happened? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you at the next one.